This is Damon Stevens, Fenwell Pillars. Today is Sunday, June 5th, 2022, and this is stock market update and preparation for this week coming up. So ended up closing the week out, a little bit red after having an up week the prior week. So we did break the trend, but we went back red again. So what's the plan for this week? Let's get into it and take a look how the week went last week and what that says about this week coming up. So let's get right into it and take a look at what's going on in the market. Looking at Friday here, you can see the Dow Jones closed down 1.05%, NASDAQ down 2.47%, and S&P 500 down 1.63%. So money flew back out of all the tech and all these areas, back in energy. Energy continues just to dominate. Energy is so doing really well. What does that mean for the market? How far can this go, energy, before it tops out? Also, there was one hit the scanner, TPTX. Did not trade this one, but maybe you did. So if you did, congratulations on that one. That did hit the scanner, but I did not get on that one. I was looking at too many other stocks. Looking at the futures here as we look through the weekend. This is on a 4-hour chart. This is S&P 500. You can see here just consolidation, and we're just kind of in this little range here. And it's just kind of going back and forth here for quite some time now, just kind of building up energy. So typically, coming from the bottom, this would look like, a nice bull flag. But, we got to either break out above this 4,200 area or break below this 4080 area on the ES to kind of get some trends. Right now, we're just consolidation right here, just kind of accumulating a lot of energy that's going to explode one direction or the other. Looking on a weekly basis, you can see here our trend line. It did come down, tag the line here, and just bounced off, but still flat. So undecided, it is above the 100-day moving average on a weekly chart. So hopefully we can bounce off of here and run. My bias is really probably more to the north side rather than the south side, but could be wrong. We did start to retrace this candle, and so sometimes, when a large candle is created, you end up retracing at least 50% or more. The only thing I do see is that this 100-day moving average could provide support for the ES and allow it to bounce, but we'll see. We'll see what this week brings. Definitely watch the price action on Monday to start to get some direction on where we're going to head. One of the things also that was interesting is the max pain. So talk about this, as far as the options traders who are buying, puts, calls and puts. That sometimes, a lot of times the market will try to create the most pain, which means they take out the most of the people out of the market. So you can see the call volume was just huge, last week with the SPY, like what most of it 430, expecting 430 for their calls. And you see here, the max pain was 410, which is down here. So all these people on calls waiting for the market to rally last week for a second time. Were met with disappointment. The stock price closed at 410.30, right on the max pain, which it created the most pain for those who are short in the market and the most pain for those who are going long. That's typically what you're going to see a lot of the time. We saw that the prior week where, the market rewarded everybody, basically just was the total opposite and just really rewarded people well. But if you're in options, but this week, max pain fulfilled its need. The market did what it needed to do to liquidate all these options traders from their money. So we'll see what this next week brings, what max pain is. We'll have a new numbers come out starting Monday. And Monday is a really heavy day for, options traders to accumulate either calls or puts. And so right now, in the next week, this will probably be pretty slim, but Monday, Tuesday, it should build up here. We should start seeing the trends as far as at least where the market thinks it wants to be. Look at the week ahead as far as news is concerned. You can take a look here at the calendar here. There's nothing on Monday. Tuesday, not a whole lot either. Consumer credit. Wednesday, light. So really, initial jobless claims. So Thursday, we start to get some information from the feds. And that will start to possibly, have some effect. Consumer price index and CPI numbers for the month are coming out on Friday. So that could definitely add to some volatility as we close out the week next week. But the first week's pretty quiet so far. There's other things that could pop up, but right now, as far as what's planned, pretty quiet on the news front. Looking at Google, You see here, we're accumulating. So this looks very much like a, a bull flag here, run up here, accumulating over the 20-day moving average. Looking for a continuation play, towards 2,400 on Google. Now, one of the things, Amazon's been split into 20-for-1 split, which I'm not on Amazon right now, but just keep that in mind that that is Monday. So, definitely expect some volatility this week, probably with Amazon with the split. And so Monday, you should see that price reflected. It's a 20-for-1 split. So lots of cheaper prices for those who are looking to accumulate Amazon here. And you see Amazon, nice little rally up here above the 20, kind of sandwiched between the 50 and the 20-day moving averages, kind of flat here. So we'll see what that brings. Coming into Monday, do we break above and the 50-day moving average and rally from here? Just be careful. A lot of times there is a rally that happens, but then there's also typically a pullback. And, so that first week is, basically everybody kind of digesting all the price changes in the stock and seeing whether or not it's going to attract people in, or people who just assume it's already priced in and are not that interested in Amazon. And also Amazon did elevate, so there could be profit taking here as well. And if this is a double bottom, we're pretty close. If we hit that 50-day moving average and tag that, we could have a pullback, because that would be completion of this run on this double bottom. So just keep that in mind as well. Apple, little consolidation here, a little bit of a pullback here. We're pulled back into support. You got a little, you see here, this little shaded area here is where we had a little gap. And so we kind of came down to fill that gap on Apple. So do we bounce back and get back above the 150 area and start to rally? We'll see. If we keep below that 150 level, we could have a playback down, to the low 140s. NVIDIA sitting here right as well, above the 20, sandwiched in here. So this is a little range here. So we're just playing a range right now, trying to build some energy up to make a direction either to the north side above the 50-day moving average, which we talked about, over a week ago. That would be probably the goal of where things are headed. And they got pretty close and then started to pull back here. So, it either has to break this 20 to the downside, or we got to get up to 58 and break up. Otherwise, we're just going to be stuck in this range for a while. Facebook also, a little consolidation right here. So we got to get above this 50-day moving average, or, you can see here, we're right below the 20-day right here, but we're also, above this trend line. So this is definitely could be a bull flag and breakout. So just watch price action here. 194 or 195 is where we need to break up for Facebook to continue really up towards that 200 area. Shopify, I thought this was going to do something here. That's why these lines were in here, to see if there's a double bottom. It kind of broke that double bottom. So this is pretty much off the list now. This became more of a consolidation area. So I'm going to take those lines off, because this is, now you can see here, just a nice consolidation, building energy to go somewhere. Don't know where yet. But you see we're outside these trend lines. We're below the 20-day moving average, consolidating, which typically would be a downward movement. But we'll see kind of where the market goes. But definitely, Shopify is not giving you a whole lot right now. LRCX, you can see here, we came from this side of the deviation bands to this side here. And then we just kind of consolidated and actually coming down. So do we come down here back towards, this lower deviation band, or can we split up and break out and push this deviation up higher? That's kind of what it's trying to do, but you can see here constant resistance as we kind of pull back below this 100-day moving average. So, kind of a little bit of sandwich here. So between the 100 and the 50, you can see the 20 is curling up, which is good. So that hopefully will give us some strength, and maybe we can push up, above the 100 here. RK, again, choppy, consolidating really for several weeks now. So really got to get above this 20, breakout, above this 46 level to rally up towards the 50-day moving average. Otherwise, we might consolidate here and we could possibly break down at some point. Berkshire, Came up here, tagged over the 20-day, and then pulled right back below behind it. So we're sandwiched between the 20 and the 200-day moving averages. That's more on the weaker side. So we'll see, if we get energy break back up, but more than likely that rejection on that 20, we very well could come back and retest this 200 or actually a little bit lower. Continue to subscribe if this is helpful. Please smash the like button and help us out so we can continue to bring this content to you and these trade ideas. Don't forget, we have a free Discord service where you can go out and we publish our trades for the day and our numbers that we're looking at trading. We do that every morning before the market even opens so that you have all that information ahead of time. So definitely join our Discord at finwealthlive.com. You'll find the link. Also, there's some free training out there and also a membership if you want to be part of our community. So go check it out, and let's get back into the rest of the market here. So the dollar, you can see dollar consolidating here is sandwiched between the 100 or the 50-day and the 20-day moving average. So we've been here for a couple of weeks. So obviously the market's, kind of stuck in this mode of kind of looking to see what direction things are going to go. So definitely need some type of news or some momentum here to get us moving either above that 20 or below the 50-day moving average here on the dollar. Gold try to rally up here over the weekend here, trying to get above that 20-day, trying to break out above resistance. You can see it was resistance before, and it continues to be resistance. We pulled back again off that, so we're kind of still stuck in this zone, really between, right, this right now we're below the 200, the 20, everything pretty much. So you can see we're kind of just back and forth. We really need to get above this 1870 level to break out. So we'll see if we can get enough energy on gold to start moving, but right now, not a lot of movement, and it's below the moving averages. VIX. So this one is the one we got to be careful with and watch for this week. This is the 200-day moving averages. It'd be great to, to get below that. That would be very bullish for the market. But we're sitting here right here, just below our resistance line here, our support line here at 24.74, and right above that 200-day. We very well could bounce off of that. So you got to be careful this week. If we do continue down, the market will continue to rally up. So we're looking for the price action on Monday. You see this long doge here. So we did have rejection off the 100-day moving average when it pulled back down here. So very well could see this stay down here. If as long as it's under 25, should be able to see the market continue to rally up. SPY here is on a 4-hour. We're looking at to see, was this putting in a double bottom? And if so, do we rally up here towards that 200-day moving average? But, kind of losing it right now. We've got a bull flag, it looks like, started here. So it's possible, to get up here towards this 429 area. But if not, if we break this support line here at the 20-day and the 50-day, we very well could come back down to these lows around 380. So here's the SPY again on a daily time frame. You see again the same thing, sandwiched here between the 50 and the 20, building energy up in a bull flag, which typically means going to the north side. But if we do break the 20-day moving average here, around the 406.50 area, very well could start to come back down and test the lows again. Triple Qs, again, bull flag, consolidation, looking for a breakup above the 50-day moving average here, around 338. If not, or 318, sorry. Or if we break down, below this support line here, 301, very well could come back and test those lows again. Semiconductors, you can see here, nice little bull flag, again, consolidation. Here we're consolidating right on that 50-day moving average between the 100 and the 20-day. The 50 days running right through the middle. So we really got to get above this 100-day and the 50-day move, the 200-day moving average to rally here if we want to. If not, we could break down or maybe just stay stuck in this range. You see, we've been stuck in the past in this range, so it's very well that we could just sit here for a while. IWM, same thing. You're seeing very similar charts here. So the market's kind of all in line with each other, and really kind of looking for the direction as far as whether it wants to let the bulls take back over, or if the bears are going to continue to push us down lower. So you can see here with the IWM, the Russell 2000, stuck really between the 50 and the 20. So we need to really break one to the downside or break the other. And once we do that, the whole market should come with us. The financials, XLF, you see here, same thing. Although financials on Friday kind of pulled down to the downside. And you see that sometimes they'll do that, and then you see this rally up. So are we seeing the same thing where this is going to pull back here and rally up off the 20-day moving average as support and break through finally? Or is this a weakness candle like we had here to where it just breaks down from here? So again, above the 50-day, we rally. Below the 20, we'll be coming down to lows again. So hopefully we get some direction this week. If not, we could see another week of consolidation. Healthcare did break down below the moving averages, so very well could come down. If this is a leading indicator, which I typically do not use healthcare as a leading indicator, I'd say that we're headed to the downside. Because healthcare obviously broke all those moving averages, very well could come back and test these averages or these levels down here at 125. So healthcare is looking like it's coming down. Energy sector, we talked about this. We are consolidating in our little zone here. And working again towards the highs and looking at possibly making out new highs. So again, market consolidating here, but the energy sector is definitely consolidating at the top. Bitcoin still in our range here for a few weeks. We're above the 20-day moving average, which is good. Maybe we have a chance to break out this week. We really need to get to head get above this 31,000 and continue to hold that and break that. To rally up here. But again, consolidating this whole zone right here. Ethereum, same thing, in a little zone right here. Consolidation, really need to get above the 20-day moving average to rally any higher. That's our stocks, our cryptos, things we're looking at in the market, what we're looking for tomorrow. Really got to watch the market. We're at really a pivot point. If the VIX comes down or stays where it's at, more likely we can get a rally up on the north side tomorrow, and we're looking for the SPY to break, the 413 area. If the SPY gets below 409, we're looking for more downside. So we'll post these numbers out there right before the market opens, so you have fresh information. We'll have the numbers posted as far as if the market is going up, we're going to have numbers going to the upside, and what those are for taking your profits out and making money. And then again, on the downside, if we're seeing the market, just before the market opens, going to the downside, you'll have those numbers as well. So check it out, join us. Again, like our videos, that way we can continue bringing this content to you. And everybody, good luck on Monday. We'll meet Monday night, review our trades for the day, and plan out our day for Tuesday. Everybody enjoy the rest of your weekend and have a good night.